Welcome to the Trading Bell. I'm Noakip Kimboy. Today we are at Centum looking at their year result ending 31st March 2021. How have they performed in their different businesses? At the same time, we look at the impact of COVID-19 to the business and how they are acclimatizing and cushioning themselves to perform even better moving forward. Before we do much, let's take a look at the profile of CEO James Mori.
Dr. Mori is the Group Chief Executive Officer and the Managing Director of Centum Investments Company, a position he has held since October 2008. Dr. Mori serves on several boards, including those of Cedian Bank Limited and Almasi Beverages Limited, where he served as Chairman, Nairobi Bottlers Limited, Isuzu East Africa Limited, and Lewa Wildlife Conservancy. Dr. Moria also serves as a director of Centum Exotics Limited, Investpool Holdings Limited, Centum Development Company Limited, and Two Rivers Lifestyle Center Limited. Dr. Moria was also appointed as the Chancellor of Machakos University in October 2016. Dr. Moria holds a Bachelor of Law degree from the University of Nairobi and a doctorate in business from Machakos University. He is an advocate of the High Court of Kenya, a CFA charter holder, a chartered global management accountant, a fellow of the Kenya Institute of Management, and a member of the Institute of Certified Public Accountants of Kenya.
So, Mr. James Mori, welcome to Trading Bell.
Thank you, Noah. It's a pleasure to be on Trading Bell.
Okay.
Yeah.
So, 1 year down the line, when you look, for the past 1 year and the impact that you have seen the pandemic have on businesses, and also recovery strategies that businesses are acclimatizing to this new world that we're in. It is shown by the numbers in one way or another, because we say numbers don't lie. For Centum, let's take a look at the company, Centum Investment Company. Profit after tax standing at a loss of 606 million, but this is an improvement.
Yes.
From 3.4 billion.
Yes.
I mean, what changed and what caused this?
Yeah, the investment company numbers, the 606, has been impacted by two main numbers. One is there's the operating profit, which is the revenue we earn from our investment companies, whether it's dividend, interest, fees, etc., less costs. That has been profitable. Last year and this year was 245. Last year was higher. What has affected our performance has been impairment provisions. Impairment provisions is what we pass through the profit and loss when we conduct year-end revaluations of investment companies. And these are companies where we've not had any previous revaluation gains. So last year we made a full provision for our investment in Amo Power, which is what contributed to the loss. And this year, we reduced the carrying value of our investment in a company called Akira Energy, which is also now contributed to the loss. But at a cash operating profit level, we've been profitable in both years. Yeah,
that's quite interesting, because you've seen the impairment costs going out of the roof for majority of companies.
Yes.
I mean, how do you keep that in check?
It's difficult, and because you see, when you look at how we value the assets, the requirement is to, if you're an investment company, you're required to fair value your assets on an annual basis. And the valuation is a price that a willing buyer and a willing seller would transact at that particular point in time. The markets have been affected by COVID. So as the markets have come down, the market multiples have reduced. And when you hold private assets, you make reference to public market multiples. So when the multiples come down, automatically your evaluations are affected. The second impact that the environment has had is that earnings have declined for a number of companies. So it meant that you've had a double hit. You've had a hit both on the profitability and the multiples. But these are unrealized losses. It's not a loss that you've gone and sold at a loss. It's that at that particular point, you had a company that was trading at 10. In your estimation, it's now 7.
Yes.
So the 3 is what passes through the profit and loss statement.
Okay.
Yeah.
That's very critical. So that is the company, and you've mentioned actually less impairments. If you remove impairments, you're doing pretty well in an environment comparing with your peers. Yeah. who
Yeah.
are in the same spaces as you are.
Yeah.
How can you gauge yourself where
You know,
are?
the bulk of our peers who are investment companies trading in private equity assets, they're not listed. So what you can look at is the internal rate of returns that is declared for other private equity funds. And I think Centum is in the top quartile when we compare ourselves with those particular entities. A lot of companies similar to Centum tend to be private entities, so we are not privy to their performance.
Yes.
Yeah.
So the listing also makes a difference right there.
The listing puts pressure on
Yes.
you. You have to meet investors every 6 months, meet reporters like Noah here.
Yes.
Yeah.
Looking at the company, there are quite interesting dynamics when you look at some of your businesses. So, for example, when you look at the trading business, for March 2020, it made a profit of 25 million. And now that has dropped to 529 million in a loss, in a negative statement. We also look at the financial services, which has improved actually from 171 to 330. Profits from the financial services. Maybe elaborate for us that improvement.
So the financial services is largely our investments in NABO, in CDN, and there's been an improvement because we are consolidating to March 2021. So if you look at the performance of CDN to March 2021, there's been a good improvement. The performance of NABO, there's been a good improvement compared to the similar period. So that has done well. The trading is Longmont. So the bulk of that loss is because of Longmont. So if you look at the performance to March 2021, it had come down. But that's because schools are closed.
Yes.
And schools are not just closed in Kenya, they're closed across the continent, all their markets. But you're now seeing a recovery as schools reopen.
Yeah, definitely. Yeah. We're seeing schools reopen, and I'm told quite a huge chunk is invested into the the economy when schools reopen.
Yes.
I don't know how critical will that be when we talk about post-COVID.
So we're seeing a lot of orders have come back. You see, once there are two things that happen. Schools closed, and all students were repeating. So there's no need to buy books. Yeah, because if the students are going to repeat the class and not sit the exam, and it happened at the beginning of the school year, then there was no need to buy books for the next year. So the orders that Longhorn had placed that had been made for Longhorn by its customers, a lot of them were deferred. Okay. So that's what affected Longhorn. That was sort of the COVID impact on Longhorn.
Yes,
yeah,
definitely. Real estate, which you are well known for, Centum Mori, looking at the numbers, actually, when we look at profits from real estate investments, they have reduced, and for a fair reason, coming from 3.56 billion to 875. And we understand the impact that the operational environment or operating environment has had on the real estate sector. But for you specifically as a company, why this reduction?
So first, let's take a step back on what we've been trying to do as an investor in real estate. You know, our intention was to create value by moving from bare land, actually agricultural land, change use, master plan, start developing it, organize it in a way that you now have a company holding it with a board and a business, end up with an investment grade asset, and ultimately exit. That's the journey we've been, and we began this journey 10 years ago, 2010, 2011. We've invested about 7.5 billion shillings in setting up Centum Mori. Last year was a landmark year because last year is when now we finally consolidated all our real estate holdings, excluding TRDL, under one company called Centum Mori. It has a board, it has a chairman, it has a management team that is now fairly independent of Centum. They also got their credit rating, an investment grade credit rating. They were the first real estate company to go to the market to issue a bond, which is now listed on the NSE, and they announced their own results. And also last year was the first year when they made a significant capital distribution back to Centum. So of our 7.5 billion last year, we got 4.5 billion. So we got 60% of our money back. So we are now down to 3 billion shillings. So the way to look at it from my perspective, from the investment perspective, yes, there may be a reduction in profitability, but what is critical for us is our cash return back from the investment. So last year was actually a great year. We got 60% of our money back. Now, in the next 3 years, based on the pipeline of what they are constructing and what is sold, we expect an additional 5.5 billion of distribution from that particular company, which will mean that we'll have gotten back all our money plus a profit, meaning what is left is pure value that has been created in the period. And ultimately, the desire is to sort of do what we've done with every other business, build it up and ultimately sell it, because you've created a wonderful platform company for strategic investors to come in. So that's what we focus on as an investment company. In terms of last year, initially there was a slowdown in terms of cash collections. Theirs is a customer-driven model, so they sell and they collect. So last year we had initially a reduction, but then it picked up. So the previous year to 2020, collections were 1.5 billion the whole year. Last year they had 1.8 billion. But this year, incidentally, the first quarter to June, they collected 1 billion. So they collected 60% of what they collected the whole of last year. So we are seeing a strong recovery within that portfolio company.